Welcome to Iraqi Dinar Hub, your dedicated source for ongoing developments surrounding the Iraqi dinar, the Vietnamese dong, and the evolving dynamics of Zimbabwe's currency landscape. We begin today's coverage by examining one of the most compelling and widely discussed anomalies to surface within the alternative currency community in recent history. As the midday trading period appeared to be settling into its normal cadence, precisely at noon Eastern Standard Time, a sequence of highly unusual digital signals were reportedly detected within the internal financial systems of several major United States banking institutions. This was not framed as a localized error or an isolated technical malfunction, but rather as a coordinated, multi-institutional occurrence. Those closely monitoring secure financial infrastructures immediately took notice, as the event stood apart from routine operational irregularities. What followed ignited widespread debate and deep analysis, sending ripples through global financial discussion circles operating beneath the surface of mainstream coverage. According to multiple accounts circulating within financial sector circles, employees at well-known institutions including Wells Fargo, Bank of America, and Fifth Third Bank observed unexpected anomalies within their internal data feeds. Specifically, foreign currency module systems accessible only to authorized personnel briefly displayed what appeared to be markedly altered exchange rates for both the Iraqi dinar and the Vietnamese dong. These were not minor decimal shifts typically associated with intraday movement. Observers described values that closely mirrored long-theorized revaluation benchmarks rather than prevailing market rates. Although the figures reportedly vanished within moments or reverted to restricted access status, the psychological effect on those who witnessed them was immediate and substantial, prompting urgent scrutiny and internal discussion. The response across the digital finance and currency tracking community was swift and intense, spreading with the speed of a spark in dry conditions. In a matter of minutes, Telegram channels, so often regarded as the nervous system of speculative currency networks, became inundated with first-hand accounts and alleged screenshots. At the same time, Reddit forums and long-established message boards dedicated to monetary reform experienced a sudden surge in activity, as users around the world attempted to corroborate the information. The atmosphere quickly became a blend of excitement and restraint. Some participants declared the event a long-awaited confirmation, while others emphasized caution, stressing that without formal validation from official authorities, such flashes could not yet be treated as conclusive evidence. Despite the absence of immediate public statements from the Central Bank of Iraq or the State Bank of Vietnam, the coordinated nature of the event was sufficient to reignite global investor interest. To appreciate its potential significance, it helps to understand how large-scale financial infrastructure updates are typically handled behind closed doors. Veteran observers of international currency systems have long noted that synchronized system behavior often accompanies preparatory phases for structural changes. During these periods, institutions engage in extensive back-end testing involving temporary rate injections, full network refresh cycles, and stress tests to ensure data accuracy and stability. These processes are generally invisible to the public, shielded by layered security protocols. However, during massive system upgrades, brief visibility leaks can occur, allowing internal testing data to momentarily appear on frontline systems. The characteristics of today's anomaly closely resemble the expected footprint of such a visibility leak during a high-level propagation test. Notably, the altered rates did not appear on consumer-facing platforms or widely used public data services. Major financial information providers such as Bloomberg, Reuters, and continued to reflect standard market values throughout the day. This distinction is critical, as it suggests the activity remained confined to interbank or sovereign-level systems, areas where liquidity management occurs and only authorized institutional participants operate. Had this been a general technical glitch, it would likely have surfaced across public feeds as well. Its restriction to internal banking environments points to a controlled, though briefly exposed, back-end process. The Iraqi dinar remains central to global revaluation discussions, and today's developments have intensified that focus. Iraq's economic story is defined by vast untapped potential, supported by significant energy resources and a political environment that has been gradually stabilizing. Over the past year, the administration under Prime Minister Mohammed Shia al-Sudani has advanced a series of financial reforms aimed at integrating Iraq more fully into the international economy. These initiatives include strengthening anti-corruption mechanisms, expanding digital payment infrastructure to reduce cash reliance, and addressing cross-border smuggling channels that have distorted currency value. Together, these measures represent a foundational restructuring designed to support a stronger, internationally recognized currency. The timing of the digital flashes becomes even more intriguing when viewed alongside recent official communications from Baghdad. In May 2025, the Central Bank of Iraq announced that its preparatory efforts toward establishing a unified, market-reflective exchange rate were nearing completion. Many seasoned analysts interpreted this as a signal that Iraq was transitioning from planning to execution. Against this backdrop, reports of adjusted dinar values appearing within U.S. banking systems suggest that preparatory statements may now be translating into active infrastructure testing, placing real-world banking connectivity under technical scrutiny. The inclusion of the Vietnamese dong in the same event adds further depth to the analysis and lends way to the theory of a broader, coordinated adjustment. Vietnam's economic path differs sharply from Iraq's, defined not by post-conflict recovery but by decades of consistent industrial growth. With a robust manufacturing base, expanding middle class, and extensive trade ties with Western economies, Vietnam's macroeconomic fundamentals have long supported the view that its currency is undervalued. While the dong has historically been managed to support export competitiveness, recent regulatory shifts indicate a move toward greater valuation transparency. These include enhanced monitoring of capital flows and compliance with international banking standards. The simultaneous appearance of both the Iraqi dinar and Vietnamese dong within internal banking systems has led analysts to consider the possibility of a multi-currency testing protocol. Isolated incidents might be dismissed as random errors, but the pairing of two currencies frequently cited in revaluation discussions suggests structured activity. This aligns with theoretical models of global monetary recalibration, where multiple sovereign currencies are adjusted in coordination to reflect updated economic realities. While speculative, the synchronized timing and multi-institutional scope point toward an organized simulation designed to evaluate systemic readiness. Notably absent from today's reported system flashes was Zimbabwe's currency or its gold-backed successor. While this exclusion initially raised questions, it does not diminish Zimbabwe's relevance within broader reform discussions. Zimbabwe has undertaken significant steps toward monetary stabilization, including the introduction of a gold-backed framework earlier in 2025. Regional data indicates improving interbank settlement performance, suggesting progress toward rehabilitation. Analysts propose that Zimbabwe may simply be positioned within a later phase of integration, highlighting the staged approach typically employed in large-scale financial adjustments. Global financial institutions such as the IMF, World Bank, and U.S. Treasury are known for their methodical timelines. However, recent assessments have placed both Iraq and Vietnam in a positive light, acknowledging notable improvements in governance, transparency, and policy execution. IMF reports from June 2025 commended modernization efforts, while the removal of U.S. Treasury currency manipulation concerns signaled increased institutional confidence. These endorsements are often prerequisites for major valuation changes. The Bank for International Settlements has also emphasized that extensive private testing is required before sovereign adjustments are made public, reinforcing the interpretation of today's events as preparatory in nature. Additional indicators emerged in the aftermath of the flashes. Several banking institutions reportedly restricted or temporarily suspended foreign currency services, citing system maintenance or updates. While such notices are not uncommon, their timing and closely align with the alleged rate appearances added to speculation. In institutional contexts, maintenance frequently accompanies significant back-end configuration work. This suggests that the flashes may have been symptomatic of deeper data handling activities requiring controlled service interruptions rather than superficial display errors. The digital footprint of the event was substantial. Analytics firms recorded a dramatic increase in traffic to websites, forums, and platforms focused on dinar and dong information, with reported spikes exceeding 300%. This surge underscores the level of anticipation within the community. Further context emerged from off-record insights attributed to individuals with system analysis backgrounds and prior advisory roles. These sources described synchronized flashes as characteristic of liquidity environment testing, procedures designed to ensure systems can handle transaction volume when new rates go live. Such visibility leaks, they explained, often indicate late-stage readiness pending final approvals. Compounding the intrigue were renewed rumors involving high-net-worth clients and private wealth advisory communications. Stories circulated suggesting that select individuals were advised to remain locally available over the next several days. While anecdotal, similar guidance has historically preceded major institutional events, focusing on readiness rather than specifics. Such advisories typically emphasize communication availability, hinting at upcoming developments that may require swift financial decision-making. For holders of the Iraqi dinar, Vietnamese dong, and Zimbabwe-related instruments, today's activity serves as a reminder of the importance of preparation. Regardless of timing, practical considerations remain essential. Documentation related to currency acquisition should be secure and verifiable. Official sources should be monitored closely, and reliance on unverified online claims should be minimized. Identifying banks with established foreign currency desks and understanding their procedures can prevent last-minute complications. Beyond immediate reactions, some analysts explore scenario-based frameworks to conceptualize these mechanics. In such narratives, beneath the surface of retail banking lies a tiered network of institutional gateways. Within this model, digital flashes are not errors, but indicators of calibration cycles as systems synchronize across borders. Visibility leaks occur when barriers between test and live environments briefly overlap, offering fleeting insight into the magnitude of underlying processes. Within these scenarios, Zimbabwe's absence from the U.S. tests is attributed to a multi-phase rollout. Given the complexity of global financial architecture, currencies are often integrated in waves rather than simultaneously. Iraq and Vietnam, having met specific compliance and economic benchmarks, may occupy an early tier, with Zimbabwe scheduled for subsequent integration. This staged approach helps maintain settlement stability and prevents systemic overload. Such models also describe heightened vigilance within central banks during these periods. Officials would closely monitor geographic dispersion and institutional participation in anomalies. The simultaneous appearance across multiple U.S. banks would confirm active transition phases and functioning technical bridges between domestic systems and Western financial networks. This level of coordination implies a reconciliation process managed with international oversight to protect global equilibrium. Additionally, these frameworks often account for intelligence and security monitoring following visibility leaks. Rapid spikes in communication and speculation can introduce risks, prompting oversight agencies to assess stability impacts. The absence of severe countermeasures suggests the situation remained within acceptable parameters, reinforcing the image of a controlled, high-stakes environment. Attention now turns toward the widely referenced 72-hour window associated with institutional confirmation cycles. In theoretical models, this period is used for alignment of sovereign outputs, reserve verification, and settlement pathway finalization. During such intervals, banks often enter controlled readiness modes, restricting select services while implementing final configurations. The convergence of today's events with this time frame has intensified expectations of further developments. It remains critical to approach these signals with measured judgment. Forecasts and valuation models are hypothetical and subject to a multitude of variables, including regulatory cooperation and political decisions. A test does not guarantee immediate public implementation, but it does suggest operational momentum. The complexity of these systems means timelines can shift, even in advanced stages. In conclusion, Today's synchronized digital flashes represent one of the most compelling indications to date that discussions of global currency reform are transitioning from theory to execution. Whether this was a final pre-implementation test or an intermediate phase, the patterns observed in coordinated institutional behavior, brief visibility of internal rates, and subsequent maintenance actions are consistent with historical precedents. We will continue to report on these developments with clarity, balance, and caution. As always, this content is for informational and educational purposes only and does not constitute financial, legal, or investment advice. Stay tuned to Iraqi Dinar Hub as this story continues to unfold.